Good morning, friends, and welcome back to another weekly episode of a review of Indian equity markets. What we are seeing uh, on the screen is a Nifty 50 chart. Now, as you can see for the current week, and this is a weekly chart, so as you can see for the current week, we have now printed a fairly strong bearish candle, which definitely has is kind of engulfing in nature as far as the previous week is concerned, and also a week before that. So in terms of view of the market or price action of the market, it clearly says that the upswing that we saw over last 2 weeks, right, and the positivity around that is now kind of getting uh, has got fully absorbed, and there is some bit of selling pressure which is building in the market. So what does this price action say? This price action says that we have printed a higher high. Uh, Now we need to see as to what the market does at 19,200 levels. And that's going to be fairly interesting because that's the level where market kind of formed a small pivot, right? Or minor pivot, if I were to say so. Now, the pace with which it has kind of come back or is trying to come back towards that pivot is something which is not a great indicator. The volume for the week is not expanded, which does definitely says that there's not much. The intensity or the selling intensity is not kind of picked up the way we could have seen when there's panic all around the market. That's something that we'll see when we look at some of the other indices as well, right? So the volume spike is something which has not taken up. But if you see these two candles, while the volume spike was not there, but definitely what happened is a downward pressure which got exerted for next 4 5 weeks, and then there was some effort to counter that. But we were clearly in a trend of lower high, lower low. This is in June. Now, again, something similar played out here. If I were to kind of convert this into a horizontal vertical line, the volumes didn't pick up actually for next 2 weeks, while the markets continue to trend lower, and then they formed a range and again kind of start their downward journey. I think there's no reason to preempt the market as to what can happen next week and so on and so forth. And when we say no reason to preempt, we are not saying that we should just close our eyes and sit and wait for the market to act. We need to have some guidelines in place or some thought process in place. But broadly, the idea is not to act in expectation that because this has happened, now that will play out. But we need to mark out our levels and see as to what happens. Like, we marked out levels here. We said that this is a point where it's a breakout point. We should start picking up some positions here and then keep adding positions as this stage region were to be crossed, which is exactly what we could have done. While markets went up by close to 600 and 500 600 points from here, but in one strong candle we have given up all the gains, right? If we were not smart enough to kind of put a stop loss or trailing stop loss. So that's the texture of the market, and we'll get to understand the behavior of this market as to what is happening in the market as we look at other indices as well. But Nifty per se is clearly showing or exhibiting downward pressure. We should be careful. We need to look at what can happen at 19,200, and from there we need to kind of take it as it goes. As of now, Nifty is very close to 1 second. Let me get the right marker here. Yeah. So, so when you look at what has happened on daily basis, now we have come very close to the 50 DMA or test of 50 DMA, right? And the pace at which we have come down is clearly visible here, which was not so clear in terms of your weekly candle. So we started Monday on a slightly negative note, so nothing to worry out here, right? What happened on Tuesday was definitely a cause of worry. So we found a big gap out here, and the downward pressure continued for the day, and then we had another gap. So now we have two gaps in play. Now, if you see, while we go up, we say that gaps are form strong support and resistance, right? So I think on the downside as well, the gaps have similar implications. So now we have to be mindful of what Nifty can do if it tries to kind of consolidate and try to move up. But very clearly, we have seen strong selling pressure building, at least in terms of price action. We are seeing strong selling pressure kind of building up, while volumes are yet to kind of pick up the way to scare away a lot of people. Uh, Now, this may not be a considered as a strong support and so on and so forth, but because it is coinciding with 50 DMA, we need to see what happens out here. But my sense is we will definitely, even if this was a medium, very short term kind of correction, or the nature of this correction were to be fairly short term in nature, I still think that we will breach 50 DMA, try to rotate somewhere here for some weeks, some months, and by then 50 DMA slope would also kind of start flattening out. And then we'll have to see what happens unless we see a strong downward pressure which can bring down the Nifty below 18,500. Right. So, so I think let's take it one day as it comes our way. But no new positions. Obviously, there's nothing new to talk about. Right. We've been cautious for a while now, so there's no reason why we should try and become optimistic at this point of time, especially when the markets are heading south. Now, as I was saying that let's look at what is kind of driving this downward move. What's important is we need to look at, so this up move started coming about with the uptick in Nifty Bank, and that's something which is very clearly not in great shape. We failed to take out previous high, and then we have started seeing strong downward pressure, a bearish engulfing kind of candle forming out here. It has kind of taken down entire up move that we were talking about, and mind you, this up move was fairly good one. So almost three and a half points of up move is gone for toss. So this is 1600 point candle. Right? So sorry. So the two candles which kind of together combined formed almost 1600 points range is kind of fully engulfed by this single candle, and the pressure it has exerted is definitely not very positive. This is on a weekly chart. When you look at daily chart of Bank Nifty, it is below 50 DMA, right? So uh, it's come down to the breakout zone. There's a huge gap out here, and it has stalled at the all-time high level. So overall trend is not so great as far as Bank Nifty is concerned, and one needs to kind of get really cautious as to what is happening in the Bank Nifty. We are now closer to 100 DMA as well. This is a test of 100 DMA at this point of time. Let's see what happens. Can Bank Nifty come down to 43 levels? Uh, Highly probable. But as I said, let's not kind of try and jump ahead of what market is doing. Let's take it as it comes our way. Do we want to go to the shorter time frame and see what is happening in the shorter time frame? Yeah, the shorter time frame, it's a lot more clear that we marked out this was a breakout. This is where we wanted to start building positions, and then this is a big gap zone. So nothing special about this week's candles. If you can see, uh, very very few green candles and fair bit of downward pressure being exerted on the indices. So I think this has been the story of not only Nifty or Bank Nifty, but this is the case with most of the indices, and which is the reason why one has to be cautious. Not only because Nifty and Bank Nifty what they are doing, but let's look at TNX 500 clearly bearish engulfing. So this up move, if you can see, and we were kind of, I think we pointed this out last week as well, that this up move is fairly anemic in nature with no buying pressure coming its way. It's purely because while there are some mid and small caps which are still jumping around, but it's predominantly the large caps which are continuing to exert the pressure, which is the reason why the range and or there's no range of these candles, and clearly we are seeing downward pressure being exerted. So Nifty we have seen, TNX 500 we have seen. Let's look at um, Nifty 100 as well, which is not going to be very different because it's a representative of, yeah. So if you see, the candles are fairly, this candle is fairly deep and clear bearish tone is there on this candle. So now let's look at what I've been trying to say, that let's look at other large indices which exert pressure. So out of Nifty 50, Bank Nifty, which is the largest component of Nifty, is we have seen is clearly leading the downward move. Now let's look at FMCG and IT, because those are the other two large weights in the index. IT, so these are the markings that we made last week. So you see the difference between what IT is doing and what Bank Nifty is doing. Bank Nifty candle is clearly, take out this markings. Okay, so we don't have access to multiple charts in this, not a worry. If you see, in case of IT, we are seeing a long tail, which essentially means that there's some buying coming back into the indices as it tried to, as the sellers tried to put pressure on the index, right? Whereas if you look at Bank Nifty, see, it's closed right at the lowest point of the week. So that's the difference between, so where is some bit of buying which is coming up, or which is reflective. So some bit of buying is out here in case of Nifty IT. Let's look at what FMCG is doing. So FMCG is clearly consolidating in a range in this week, right? Again, some element of tail and some element of wick, but look at the size of the candle. Not as deep as what you see in say Nifty or Bank Nifty. Bank Nifty is down 3.5%. FMCG is down 0.5%. Nifty is down 2.5%. So these are the minor differences that we need to look at. So we have seen IT, we have seen FMCG. Let's look at what's happening to autos and metals. Sorry. Yeah, so Nifty Auto tried to. So this is one index which is still showing strength. It is, obviously there's loss of momentum, but it's clearly showing a lot of strength. And this candle uh, is not something that we would be worried of really if it were to be a standalone candle, not looking at or not taking into consideration what is happening in the other broader market. But given that broader market has started printing some bit of negative tone, obviously this index is not something which will act independent of the broader market. Let's look at Metals, which is another high beta sector, clearly a sharp downward tick, closing at the lowest point of the week. Uh, let's look at finance. Another story, same breakout which played out is completely kind of got negated with this strong downward pressure candle, and this is much wider than any of the previous candles that we see. So something like this is what we printed. So are we going to take out this candle easily? The answer is no. And this is despite the fact that yesterday we had some bit of positive news. So this was one index which I was kind of getting excited about, or this I thought is making all the right noise and moves in the short term. But look at the way this is also kind of altered exactly at previous resistance level. So reality, which was doing exceedingly well, has now started clearly printing strength candle on the downside. The candles are this candle is actually the widest as compared to most of the other indices that we've seen. Metal was down 4%. Reality is down 5%, 4.5%. Energy for the week is down 1%. Services is down 3%. Finance is down 4%. Oil and gas down 1.5%. So all around there is pocket of negative energy, and this is the difference that I was talking about when you look at Nifty this time, that there's not a single index which is trying to support the, or which has the ability to now put Nifty into another momentum zone. So clearly we are going to see downward pressure. Same as the case with pharma, down 3.5%. So, so downward pressure across sectors, across stocks. It's high time that people should get really, really cautious and careful with their holdings in small, mid, and micro caps. Though they continue to remain very, uh, very cheerful, if I were to say so. So yesterday also, if you were to look at the action in mid, small, and micro cap, there was some decent positive activity, and I'm sure it would reflect in their portfolios, which would draw more people into the game. Yeah, it's very important that one should be really cautious as to what is happening in the market. Now, obviously, we have not looked at from a moving average perspective what is happening. So let's kind of quickly take a look at key indicator, which is our moving average, and let's take out all other drawing. So Bank Nifty below 50 DMA, and it has come down with fair bit of pressure. The sloping of the moving average is also now kind of trying to beat it down and flatten out. So we are actually testing 100 DMA in case of Bank Nifty. Can the test of 200 DMA happen? Very possible. What's happening in IT? Well above 100 DMA, 50 DMA and other indices. Mid and small cap well above. So this test of 50 DMA can be really painful. While there's nothing wrong in test of 50 DMA and will still be above some kind of pivot or breakout range, but it's going to be painful one. Nifty Junior, no problem. Closer to 50 DMA. FMCG below 50 DMA, and clearly the trend of is now heading south. CPSC ETF, Nifty 500 above 50 DMA. Nifty 50 test of 50 DMA. Infra above 100 about DMA. Nifty oil and gas below 50 DMA, and the flattening out of curve has just started. So reality would be higher, energy higher, metal higher, but yeah, very close to test of 50 DMA. Consumer durable is higher. So auto would definitely be higher. Yes. So I think as we start heading south, we need to see as to what's happening in few of these leading indices, which are still away from 50 DMA, or which still have some bit of gap to cover in terms of 50 DMA. But broadly, as I said, and I continue to say that the downward pressure is definitely on, and one should be cautious. Now let's look at the other key indices that we use to evaluate, right? So let's start with this is nothing but Nasdaq well below 50 DMA. 50 DMA curve has moved, and kind of definitely trying to and started to kind of trend towards lower. So the uptrend has stopped, has stalled. Now we are started to see these strong candles have started exerting pressure on the moving average, and we possibly may start seeing a downward tick in this 50 DMA. Let's look at S&P 500 well below 50 DMA, below 100 DMA, strong gap area, which would pose as a resistance. And now you can also see very clearly see this downward trend line which was marked here is respected, and which is the case with both Nifty and Nasdaq and SPX. And what's happening in Dow Jones? Well, same. I think uh, there's enough and more noise, and enough and more, sorry, I would not use the word noise, but I would say that there's enough and more data points which is reflective of the fact that mid, small, and micro caps, uh, the kind of uptick that you're seeing is definitely going to come under pressure. One has to be has to save capital to try and come back into the market as the market stabilizes and tries to move. This is one index which was doing all the right things, which is Nikkei, uh, Japanese index. Now see what's happening here. There was a flag breakout which seemed positive, but it is kind of stalled here at 80H level or slightly below 80H level, and we are heading south. And this downward pressure is strong. And there's a test of 100 EMA. So there's nothing wrong with this index per se, as much as what you have seen with Nasdaq or SPX or Nifty in case of India. So what's happening on oil? Oil, which had a vertical up move, is now kind of consolidating. So a higher high pivot is marked. Can we form a higher low? Yes. Can we have a test of 50 DMA here? Can this 50 DMA, which is rising at greater than 60 degrees, can kind of peter down to 45 degrees? Very highly probable. So what can probably this happens, and then we can have a lift off, or consolidate here and lift off. But yeah, so oil seems to be cooling off. Let us see as to how it's going to behave. But at this point of time, this is one of the major things that we need to watch at. Gold is in a range, nothing special happening in gold. Uh, Euro market, well, Euro 50 is below 50 DMA, below 200 DMA, not a great sign. Uh, let's be a little more, let's give it some more leeway in terms of what it wants to do. Nikkei we have reviewed. Hang Seng is in bad shape, no doubt. Chinese index not in great shape. But yeah, I think it is trying to stabilize. This is emerging market. This is emerging market. Yeah, so I think now let's just look at one chart which summarizes this entire week. Now, this is the story of heartbeat of Indian equity markets, which is your HDFC Bank, been consolidating for a long while, has been stuck in a range. 276 days it's been consolidating, just not done anything, and the stock is heading south. It's on the verge of breaking down of this consolidation range, and unfortunately, the way this is playing out, it looks like it can clearly break down, and a lower low, a lower high has been printed for the time being. Let us see what it can do. This is going to be the first logical stop for HDFC. So this is what is likely to play out as far as HDFC is concerned. So thank you so much, guys, for watching the entire video. Sorry, this has gone much longer than what I wanted to, but yeah, this week was full of action, and I wanted to review it in depth. So so very clearly, I think one clear message coming out this week is that be very careful of your mid and small cap positions. Uh, None of the markets, whether it is domestic or global markets, are looking in good shape. Be very cautious, and no amount of good news is working in its favor. So with that, thank you so much once again for watching the video. Have a great weekend.